AVV Nation, all of YouTube, what's going on? It's Patrick with VectorVest, back with you guys to get your week started off right. I took a week off, but now I am back in the driver's seat, and today we're going to be taking a look at the headlines that are going to impact the market this week and talk about a few different trading opportunities to help get yourself in the right position to make money this week. So if you're ready to see what weekly plays I have in store for you, as always, make sure to smash that like button, subscribe to the channel if you're not already subscribed, and without further ado, let's jump right into it here today. All right, welcome back. So, as always, let's start off on investing.com to take a look at the economic news that's going to be making the headlines this week. So, Wednesday really seems to be the big day that's going to kick off the main event for this week. And that's because we have the GDP data coming out for the third quarter of this year. And also we do have Fed member or the Fed Chair Powell speaking as well. So on top of that, we have the GDP data coming out at 8:30. We also have pending home sales coming out at 10 a.m. JOLTS job openings for the month of October coming out at 10 a.m. Crude inventories coming out at 10:30. And then Fed Powell speaking at 1:30. So Wednesday is going to be a major volatility day. Now, I will also remind you guys, don't forget to come hang out with Glenn Tompkins and myself as we do our afternoon market action, where we'll be covering the Fed announcement and what they have to say live on stream and talking about what's going on in the market and how it's impacting the market. So make sure to be there at around 2 o'clock Eastern on Wednesday afternoon. And then Thursday, we have more jobs data coming out with initial jobless claims, ISM manufacturing data, and then Friday we have the non-farms payroll and then the unemployment rate for the month of November. So to recap, we have a lot of home sales data, oil news, GDP data, also jobs data as well. So how can you take advantage of this? Well, great question. Let's take a look at the picks for this week. So if we get out of here, and starting off with our candidates, as you can see, they're all ETFs because the ETFs are going to be by far the easiest way to take advantage of the overall market moves. So our very first stock in the list is Gush. Since we have oil data coming out, oil has been making the headlines over the last week or so, especially with all that's going in China. So therefore, oil could be a major opportunity to make some money here this week. So to start off our list, we have Gush, which is the 2 times leverage bullish oil ETF. And at the bottom of the list, we have Drip, which is the 2 times leverage bearish oil ETF. So if you expect oil to continue to decline, Drip may be a viable candidate. If you expect to see oil continue to move higher, well, Gush could be a viable candidate. Then with the home sales data coming out, we do have 2 ETFs depending on your personal preference. One for the longs, one for the shorts. So we have DRV, which is a real estate ETF, and then DRN, which is the bullish real estate ETF. So with that home sales data coming out, these could be viable opportunities as well. And just in a couple of minutes, we'll take a look at the charts and see what the charts are telling us here too. And then last but not least, with the Fed announcement, how can you take advantage of that? There's no ETFs talking about, what the Fed is going to do, or you can't really play in ETFs based off of what Powell is saying. So the one way to take advantage of that is looking at volatility, and UVXY is going to be my pick for this week. So looking at them here, as always, whenever analyzing an ETF inside of VectorVest, we make it easy as pie. Since the RV and RS, or the fundamental indicators here at VectorVest, are always going to be pegged at 1, your primary focus is RT, or relative timing. Well, currently, Gush is the only ETF that is in a steady uptrend. But with the data coming out, as we've talked about in previous weekly updates or weekly play opportunities for you guys, that can quickly change. And so therefore, these were looking at more technicals and more news-driven events rather than the overall price trend one way or the other. So keep that in mind. These are more speculative to aggressive trades. All right, so now that we've covered that, let's go ahead and get into the charts and see what the charts are telling us. Because as always, a chart is like a big picture of the stock, and as the old saying goes, a picture is worth 1,000 words. And speaking of charts, if you want to see live charts or live trading, make sure to come hang out with me tomorrow morning at 9 a.m. Eastern, all the way until about 11 to noon, as we kick off the second half of our Trading for Charity event. We'll be doing live trading and help raising money for Levine Children's Hospital. So I look forward to seeing you guys there. All right, let's go ahead, jump into the charts now. So we'll go ahead and graph all of them here and get them set up. And as always, it starts off with a 1-year defaulted layout. I'm going to zoom in to a 6-month time frame to get a better view of the most recent price action. So starting off with Gush, the bullish oil ETF, as we can see, we'll use our cursors from the top. And with Gush, we did have a level of resistance just shy of that $200 mark that we failed to break above once and twice, and now starting to move lower. Well, looking at the stochastics right below there, which is a great overbought, oversold indicator, as we can see, stochastics has been slowly dwindling to the downside, but still has more room to go before we get to that true oversold condition. So therefore indicating that Gush may have some more downside potential ahead. Then we look at the MACD. MACD's also starting to roll over, starting to move south again here as well. So that tells us, based off of what we see currently, DRIP may be the more viable candidate, but let's wait till we get to that chart before we make that final decision. All right, so moving on to the next one, DRV for the real estate bearish or contra ETF here. And looking at DRV, we have a nice bullish setup currently. After the sell-off we've seen over the last month or so, we now have a double bottom forming here at around 49.50 and then bouncing off of that as of today. Volume's also starting to pick back up to the upside, telling us people are increasing their buying pressure on it right now. So with the home sales data coming out in the near future or on Wednesday, we could expect to see a continuation or a nice pop, giving DRV a great short-term opportunity here for you guys. And then talking about stochastics and the MACD, seeing what those are telling us right now. MACD is starting to curl back over and potentially giving us a short-term buying opportunity if the MACD line crosses back above that signal line. Looking at the histogram, you can see it is shrinking, and that is a positive sign that a reversal may be in the near future for this one. Then when we look at stochastics, right now we are in oversold conditions. So therefore, if we can see the stock price start to move higher over the next couple of days and really start to explode with that news, we could very easily see the stock coming out of that oversold territory and also seeing the MACD turn positive on that short-term basis, giving you a great short-term trading opportunity here. Taking a look at the next, DRN. As we can see, DRN has been steadily moving lower, and just the opposite of what we're seeing with DRV. With DRN, you have a double top here, or a level of resistance forming right around 1138, where we've hit it once and twice and now pulling back from that level of resistance. Well, if somehow miraculously we see some positive data coming from the homes data, well, we could break out above that level of resistance, and that could be a great breakout opportunity to take advantage of. So if you're more aggressive, you can start to set up your bets one way or the other, whether bullish or bearish. Or if you're more prudent, wait till the data comes out and see which way that the markets react to that information. If we see DRN and we see it break above that level of resistance, that could create a new buying opportunity for a nice little profit here. But if the data is bad and we see real estate start to pull back or start to see more worrisome signs from the real estate markets, then DRV is definitely going to be the opportunity. So depending on which way you're leaning could depend on which ETF you be focused on. Getting into the next one, UVXY. So this is a volatility ETF, and as we can see, UVXY has been steadily moving lower over the last 6 months. But on a positive sign, let's go ahead, zoom in real quick. We do have a bullish Harami forming right here off the low, where the up day or Friday's price action was completely encompassed inside the Thursday's down action. So you have a bullish candlestick pattern setting us up for a potential reversal and getting follow through here today. Now, if we zoom out, other characteristics to look for that makes this a viable opportunity or something to keep an eye on is the bullish divergence we've talked about in the past. Well, using the freehand line, as we can see, price clearly hitting a new low, but looking at the MACD, a momentum indicator, we can see MACD actually is hitting a higher low currently and actually starting to potentially reverse or seeing that MACD line cross above the signal line, which would indicate a new short-term uptrend is starting to form. So keep an eye on this one. This could definitely be an extremely interesting trade going throughout this week, and especially going forward throughout the remainder of the year with all the uncertainty currently surrounding global markets. Also, one other thing to point out is it is in grossly oversold territory, so therefore there's more upside potential than downside risk at this stage, but we would like to see confirmation of the stochastics coming out of that oversold territory or crossing above that level of 20. And then last but not least, our last pick for the day, DRIP, which is the contra ETF for oil. And as we can see, oil has been steadily rising, so therefore DRIP has been steadily moving lower. But as we talked about those bullish divergences with UVXY, we are also seeing those here with DRIP. Interestingly enough, this all seems to coincide with the news coming out of China that they may be seeing slowdowns, and that is really starting to put some pressure on the oil markets here. But to demonstrate that bullish divergence, we can see the price of DRIP clearly has been steadily moving lower, but over that same time frame, we look at the MACD, and MACD has been steadily rising. So therefore telling us, as this DRIP has been moving south, momentum has been starting to wane and potentially shifting to give us a new bullish opportunity here. Now, if you're looking for a longer term entry on DRIP, what we would want to do is zoom out. And that's where we'd want to use a trend line, mark some highs here that you're most comfortable with, depending on how long you're planning on getting into that position. And then from a prudent standpoint, we'd wait for it to break above this trend line. Obviously, this isn't perfect, just drawn quickly, just as a visual representation, but you get the idea. And in your own charts, you can set this up to be exact trend lines rather than just giving a rough estimate here. So with that, let me know your thoughts down in the comments, which play you like the most. Are one of these plays in action for you currently? If not, which one are you thinking about getting into? And with that, thank you all for tuning in. I hope you have a great rest of your day. Don't forget, Wednesday at 2 o'clock Eastern, come hang out on the VectorVest YouTube channel with myself and Glenn Tompkins as we cover what's going on in the markets and talk about what the Fed is saying, the GDP data, and really give you guys insight on how to keep yourself on the right side of this market. So with all that, thank you all once again. It's been my pleasure. Take care, adios, and toodles.
Yeah.